We go back May of 2020, we get the halving, and it took a couple of months, maybe till like August, September, and then you started to see, okay, here we go, right? And we went from 10K to 30K very quickly.
Yeah.
And
I remember
from
that.
30 to 60 happened from, I think literally Bitcoin hit $31,000 on December 31st. Like it was going up $1,000 a day, and it was like 27,000 on December 27th, 28,000 on December 28th, right?
I remember that very well.
It was crazy, right? It was crazy. And so it went from 31,000 to 64,000 by March. And so in literally 90 days, it doubled in price, right? Which is this incredible run. Now it had a huge drawdown, 50%, but it kind of just returned right back to where it had been in December, right? Which was still 300% higher than where it had been at the halving point, maybe a little bit more. I think it was like $8,500 or so when it hit the halving. And if that had been the whole thing, it'd be like, wow, we went from, $8,500 to 64,000. That is this, really crazy kind of appreciation. But that drawdown happened to coincide with China kicking out a bunch of the miners and more than 50% of the hash rate going offline.
Summer 21.
Summer of 21. And all summer long, it basically was just flat, kind of hanging around $30,000. And then when we got into Q3, all of a sudden, here we go again. And obviously it peaked at 69,000 back in November of 21. And so when you look at that, what I always wonder is like how much of the quote unquote, price appreciation happened really between like September of 20 and March of 21. And that was driven by the halving versus if it had the full 18 months, like you actually get a little bit of a higher price. But if that hash rate getting kicked out of China doesn't happen, would it have gone higher? What would have been different? We'll never know. But like, to me, that is like one of the more under discussed things is just like, you basically had this price appreciation that was occurring kind of right on schedule.
Yeah.
Then you get this external shock from China making this decision. 50% of the hash rate leaves, right? It's a pretty big deal. But yet you still even got another all-time high before the end of the year.
Totally.
I mean, it's kind of crazy to think about now.
Yeah, no, I mean, look, that was a very wonderful time for me. I bought my first Bitcoin in October of 2020. That was a good run, a very good run. Yeah, I know. I mean, you and I were on your program back then saying, I think Bitcoin's going to 100,000.
Yeah.
And quite frankly, I think it would have gone to 100,000 had it not had that, exogenous catalyst in China. I think this asset class is going to be, for a long period of time, fraught with sort of exogenous events, whether it be regulatory. I mean, mostly regulatory. Obviously, that was a regulatory event in China. We're not the only ones who can regulate, by the way. But this is, I think the underlying message of the resiliency of the asset class. And I don't necessarily mean resiliency from the price appreciation standpoint. I mean resiliency from the perspective of this thing ain't going anywhere. Right? Like we had FTX and Celsius and Luna and all this other stuff happen in the last kind of 12 months. And not one time did I see anyone really question the longer term viability of Bitcoin throughout this entire process. I mean, we've seen people blow up and left and right, get put in handcuffs left and right. And and to me, so I'm very proud of the asset class for that particular perspective. I think, just from a risk management perspective, I think, there's the path to getting to this, rainbow and puppy dog type outcome is, you got to walk through the hood for a little bit.